the valuations, both in the public market as well as in the private market, are increasingly getting beaten down. Don't forget that most private market investments at some point need an exit. I don't think so it's a liquidity issue, but the focus in terms of fundamentals of the business, what is the roadmap to profitability, has just gone up significantly. Hi everyone, my name is Manpreet Ratia. I'm a managing partner with Jungle Ventures, and I'm here to talk about the current market situations, particularly in terms of what it means for us across the tech ecosystem. I think what we need to do is put our mind back to maybe about 3 or 4 years ago. The interest rates were at an all-time low, which means that the supply and the cost of capital was incredibly cheap. And when you have cheap capital which is there, they get invested and they get deployed into the public markets, and they also get deployed into the private markets, which was what was technically driving a lot of valuations up, particularly in terms of the tech stocks which was there. What has happened post that is predominantly 2 waves of impact. The first was driven by the pandemic, and now this year the recent issues at Ukraine has created additional pressure into the economies. The outcome of all that is, in order to start fighting these inflationary pressures, the regulators across the world have started increasing their rates, which means that the supply of cheap, easy capital is now no longer available. So what is happening right now is that the valuations, both in the public market as well as in the private market, because the capital is more expensive, is now increasingly getting beaten down. That's what we are seeing in the market today. Whatever we do in terms of the private markets, when we try and attach a value to a particular asset, there is always an element of benchmarking or what we would call against comparables in the public markets. So for example, if I was trying to attach a value at a startup, which is, let's say, late stage Series C or Series D, and is getting into ride hailing, for example, I would always go back and I say that what is the right comparable benchmark in terms of the public market. So I would go and look at the valuation multiples which are being attached to Uber, etc., which is there. And if these valuation multiples start coming down, automatically I would also start resetting some of my expectations in terms of the private market as well. Don't forget that most private market investments at some point need an exit. And the exit will always happen in terms of the public domain. So if the public market valuations start getting beaten down, it is but expected that the private market valuations will also start getting down a little bit. Startup need to perhaps change their lens at which they manage their business. Earlier there was a premium being paid for growth. Right now I would say there is equal premium being paid not only for growth, but in terms of the unit economics of your business. I think this current market situation has asked people to pause and say, is it the right price which we are attaching to the asset? So I tell most of my portfolio companies which I work with is that I don't think it's a liquidity issue. There's an enhanced focus on what is your profitability, what is your margin, what are your moats, what is your revenue growth, how true is the revenue growth. The scrutiny around what is going to be the financial performance over the next, I would say, 3 to 4 quarters, or even in the short term, in terms of 1 or 2 years, is increasing rather than looking at what the business can potentially be in terms of 5 years down the line or 6 years down the line. So what I would say is liquidity is available, but the focus in terms of fundamentals of the business, what is the roadmap to profitability, has just gone up significantly. The market would now give you a higher premium if you are able to demonstrate effectiveness and constant improvement quarter on quarter in terms of your unit economics of your business. Whatever we see in terms of private market or public market valuations, we do end up taking cues from what happens in the global markets. But the good news is, in India as well as in Southeast Asia, there is still a huge runway for growth which is available. So the economies will continue to grow. The penetration of digital as well as technology startups into the economy will continue to grow up significantly. There is still a huge amount of growth which is available waiting for it to be unlocked. Earlier, you could perhaps be looking at doubling your business every year. You may not end up doubling it, but you could still end up growing 75%. That is still significant. The smart investors, whether they are regional or whether they are global, still attach a significant amount of premium to startups, particularly in this space, which is India and Southeast Asia. I would always say, have faith in the markets which you operate. Have faith in the story of growth in your business model. I'm sure that you guys would have put in a huge amount of work in terms of the opportunity which you are targeting. Have faith in them. The only thing which I would ask them to do is 2 things. Increase the level of attention which you pay in terms of how efficiently and effectively you run your business. And the other message which I keep telling all my founders is cash is king, which means that you should always be out in the market talking to potential investors, talking about the great opportunity which exists, the great teams which you have, and constantly looking at raising funds. It is all about just going back to basics. Thank you for watching, and I hope you found this content as well as this chat very useful. If you have any questions or comments, feel free to leave them in the comments box below, and I shall endeavor to answer them. So thank you and look forward to speaking to you again.